All right. Well, hey, I want to thank everyone for joining us today. First Zoom Lunch and Learn of 2025. Four strategies to get sellers and buyers off of the fence here in 2025. And yeah, so my name is Dennis Wells. I'm a certified mortgage planning specialist, certified mortgage advisor, certified divorce lending professional, and a veteran mortgage advisor. And really the reason why I have done these trainings is to really add value, to my referral partners and to our clients, so they know that they are, not just getting a loan to purchase a house, but they are, uh, you know, we're presenting strategies to help people create generational wealth through real estate and having real estate be, a part of a well-diversified portfolio that will be growing hopefully here over time. So, all right. So maybe a little interactive here, but how many people have you talked to in the last 12 months that were unsure about buying or selling?
Quite a few.
Okay.
I would say, yeah, at least 10.
Okay. Cool. And so just out of curiosity, how do those conversations usually go?
Usually, like, I need to work on my credit, or I need to pay off some debt, or I need to save a little bit more cash.
Okay. Cool. And then yeah, is that kind of how it goes with you there too, Riz?
Yeah, I think mine has been more truthfully related to inventory problems, people that are looking to sell and buy. Um, and more so in such a tight inventory market, people are afraid to list their homes, and then where are we going to go, right? They don't
Mm-hmm.
necessarily, they need the funds from the sale for the buy.
Gotcha.
That
Yeah.
that that I that's been a little bit more
Okay.
common
Cool.
for me.
Okay. Very good. Very good. Well, we can talk about some strategy. Really what I wanted to do today is talk about some strategies around those things. And, we kind of talk about, what are we doing now? It may be just a matter of, hey, we're following up, we're, putting them on some kind of a drip campaign, and any other things that you all are doing now for those people.
No,
Mm-mm.
Okay.
no.
Okay. Cool. Well, good news is, I think we need more heroes in the real estate community, because there's a huge need. And what we find is that there's a recent study, 40% of homeowners and renters are unhappy with their current housing situation. And several things that are causing this. For example, homeowners believe that they are trapped with a low interest rate mortgage. Like, hey, I've got
That's
a,
the huge one. Yeah.
yeah, yeah, I've got a 3% mortgage. I don't want, a 6.5, 7% mortgage, even though I don't really like my house. In fact, just the headline, right? Americans feel stuck in their homes, as they ditch plans for dream houses with soaring prices and golden handcuffs blame. So, that, hey, I've got that low rate mortgage. I'm kind of stuck. And I think even the worst thing for renters is that they're falling farther and farther behind. They, that, we've all seen, this type of slide where homeowner net worth is almost 40 times greater than that of renters. Um, but here's a recent one that I saw, that net worth gap between homeowners and renters has reached an historic high. It's really becoming that have and have not kind of a thing. And, there's a lot of things you can look at, with that, monetary policy and those kinds of things where, when you have a home that is an appreciating asset and, the currency gets a little weaker, then, you end up with more wealth. Um, so really I feel like that the important thing for us all to be doing is overcoming fear and anxiety with strategies that are designed to produce certainty and confidence, and really kind of creating some design conversations around that like I shared earlier, as a mortgage guy, I think a lot of people think that my job is to, you know, help you get this debt, which is a bad thing, in order to buy a house, which is a good thing. I see my role totally different than that. My goal is to help people, create legacy changing wealth through real estate. And part of that is through a, responsible financing strategy that takes into consideration their short-term and long-term financial goals, as well as their short and long-term cash flow objectives, and their proper tax strategy around investing in real estate. And so I think something like that with with real estate, especially coming out of 2024 with the lawsuit with the National Association of Realtors. Hey, a lot of people think that my job is simply to help you buy and sell a house. I don't really see it that way at all. My job is to help you make an informed, educated, and confident decision around your housing in a way that's going to help you create legacy wealth, and you know, walking through what that looks like to them. Um, so I pulled in a Mandalorian. Hey, this is the way. I think the way forward, the you know the lending professional of the future, the real estate professional of the future is is going to be showing value through that the strategies and plans to help people accomplish what they want. Um, I heard an interesting script yesterday. Actually, a guy out of California shared it, and so I'll throw it out there, get your feedback on it. But for realtors, saying 2.5 to 3% commission can be very expensive for 30 to 60 days worth of work, but it can be a very minor investment when you're looking at hiring a strategic partner for the next 30 years and helping you know, you know, create that legacy, uh, financial freedom over the next 30 years through real estate. And really, I think a lot of the challenges that people are facing and the confusion they get is if they're looking short term instead of looking long term. So strategy number one for sellers is that equity transition plan. Okay, so um, you get someone, hey, on a scale of 1 to 10, how are you enjoying your house? It's probably honestly 4 or a 5. Oh, why do you say that? Well, I don't really like the school system that I'm in. Um, I don't have enough room for all the kids. I'd really like a home office. We'd really like, more land or whatever it is that people are wanting. Okay, well, I could help you find that. Yeah, but I don't want my mortgage payment to go up. So I've got those golden handcuffs. I've got this really great rate. I like my payment. I don't want to do anything about it. Um, well, what we found is that homeowners equity in America is at the highest that it's ever been, 35 trillion asset class. And so part of my job as a certified mortgage planning specialist is helping people, you know, take advantage of that to, maximize everything else that they want to do financially as well. So what we find is that, yes, homeowners have record equity, but at the same time, they have a record amount of non-mortgage debt. So those car payments, the credit cards, maybe the home equity, um, other things that they've got, student loans, things like that. And, so a lot of people get fixated on, oh, I've got this low interest rate on my mortgage. I'm at 3.5%. Well, if you have 50, 60, $100,000 of credit card debt that's at 24, 28% interest, your actual interest rate isn't 3.5% on your debt. It's probably more like that 6 or 7 or 8% that is comparable with a mortgage. And so, having a conversation with people about um, how do you get from where you are to where you want to be? let's say you take profit out of your current house by selling it. There is an exemption for capital gains for $250,000 for single people, $500,000 for married folks filing jointly. What if you took that money that's tax-free, paid off your you know non-mortgage debt that you're getting no tax benefit from, and then put less down on a mortgage on a new house, and now it's acquisition money, so all of that interest is tax deductible. Um, and one of the things about having a higher interest rate, you're more likely to be able to itemize because you know, that interest expense is going to be over your standard deduction. And, maybe your housing payment goes up, but now we've helped you create cash flow. So we can do two things with that. That additional money that you're not putting down in the house or that is left and that's left over after you paid off your debt, let's put that, in an investment with a financial planner and see what, that grows over time. And then that cash flow difference between, what your total payments were before you sold and your payments now, what if you took that difference and invested that on a monthly basis? And what we'll find, honestly, is that, you know, people are going to not only be in a house that they want to be in, and, we've created inventory for someone who really wants the house that they have, but we've helped their financial position tremendously and, potentially made them a millionaire in 15 years simply by helping them to see that they can get what they really want and, and make that transition. Um, so that's one thing that we do with our folks. Um, Second thing is that dreams and goals consultation for our buyers. And here is where, if someone is thinking about selling or buying and they're just not really sure, um, what I would invite you to do is say, hey, can I have you talk with our lending team? Because Dennis and his team are willing to talk with you. They're not going to ask to pull your credit. They're not going to ask you to send a whole bunch of documents. They're simply going to ask you some really, really good questions and get you thinking through to see whether or not now is a great time for you to make a move. Because again, as this real estate uh, advisor of the future, real estate agent of the future, I'm not simply here to help you buy or sell a house. I'm here to help you make really great decisions around home ownership so that you can create legacy wealth. And so, whether you are ready to buy right now or whether you have a plan and a strategy and a timeline for doing something in the future, I'm okay. Either way you do that. What I just don't want to have happen is you be, uninformed and really confused and just, you know, not getting the answers that you want to get. Right. So, um, in that dreams and goals consultation, we talk about, well, why are you thinking that this may be a good time to buy a new home? What is motivating you for that? What part of the buying process are you familiar with, at least familiar with? How do you see your home purchase fitting into your short and long-term financial goals? I ask people, do you have are you maxing out your employer-sponsored retirement plan? At least, giving enough to your 401k that you're taking advantage of your employer match. Do you have enough life insurance and disability insurance that if something were to happen, God forbid, to one of the spouses, that the other one would not have to sell the house, or if you have children, are you contributing to a 529? Are you concerned about maybe you don't have kids that are little, but you do have parents that are getting older. Have what is the plan there? Are they going to need some kind of assistance as they hit their golden years and they're not able to take care of themselves as much? And really walking through those kinds of things and helping people see that how they can accomplish their goals better, potentially through having a home where you're locking in your housing costs. Because we know that prices go up 90% of the time since 1942, and those 7 years that housing lost value or tied around the crash, and we all know that's not coming back. Um, and not only that, but we see, and this is Porter County, Indiana, but we can pull it from anybody in any area, and it's going to show the same thing. That we have 708 active listings currently on the market, and renters who can afford to purchase is almost 11,000. So the potential of housing prices coming down are just not existent. And so, you're looking at, a 3% average, 2.96, average per year appreciation. And, obviously over the last, 5 years, it's gone up over 6% on a yearly basis. And number three is that rent versus buy comparison. One of the things that I hear sometimes on the news is that it is cheaper to rent than it is to buy. And that can be true as long as you're not considering the opportunity cost of not buying, and as long as you're not looking at your the cost of housing not being fixed. So because your rent is going to go up every year whereas you buy a house and you paid for it with a mortgage, and that's what the price is going to be. So we can show people this rent versus buy comparison. In this particular example, I just grabbed the median purchase price for Porter County and the regular appreciation of that 2.96%, and your cash flow is better. And at the end of 9 years of owning the house, you end up with a profit of $123,000, and you have avoided spending almost $300,000 in rent over 9 years. And then strategy number four is the cost of waiting comparison. This is for both buyers and sellers. Because again, people are like, well, I'm going to wait for housing prices to come down, which we showed you that that's not going to happen. Or we're going to wait for interest rates to come down. Okay, well, if you wait for interest rates to come down, you're going to lose that appreciation gain. And even with having maybe a short term, a little bit less to rent than it is to buy, and taking off the cost of doing a refinance, later on in the year, you're giving up almost $6,000 of benefit by not going ahead and moving now. So these are the things that we bring in to our clients, because our real goal is to provide that information, education, and confidence for your clients, and help you increase your conversion by having really good conversations with people and making them feel like that going from a place of uncertainty to a place of certainty. So which one of the strategies do you think resonated with you or some of your clients the best?
I'm loving this last one that you just talked about. Uh, the cost of waiting.
Mm,
I can, think of several people that have waited and waited and waited, and they just continue to lose out on that appreciation.
yeah,
Um, waiting for rates to go down or waiting for prices to go down. And you know what? I think how much is the rate expected, to change this year? Not significantly, I'm assuming, what, 0.5%? I don't know. Who knows, right? Like nobody has
yeah,
an one, but price is definitely going to keep going up.
right, right. And we all know every time rates go down, prices of houses go up. You know,
That's right. That's right.
um, I mean, it has been pretty amazing that housing prices have been as strong as they are with rates, I mean, historically these rates are not super high, but
Yeah, that's right.
um, you know, recent history they are. And so in light of rates that are higher than what people have expected things to be, for housing values to continue to appreciate year after year, um, the housing market is just super strong.
Yes. Yes.
Yeah. Um, yeah. And so we do all of this. If someone is, again, there's two things that can happen. At the end of our, discovery call, or, our goals and dreams meeting that we have with our clients, um, they can either say, oh, hey, this is, not only is this a good time to buy, this is probably the best time to buy, or they at least say, I have a plan, a strategy, and a timeline that I can work to get where I want to be. Right. So if either way, what we're telling people is that when you're working with, Riz and Mandy, myself, the value that we bring to you and your family is not simply for the next 30 days. It's really for the next 30 years. Our goal is to help you become a more educated, confident, and successful homeowner. So we bring you value before, during, and after the transaction. So, before is about 30% of our value, right? We're helping you prepare and plan. We have a very intentional process that we work with you through before buying and selling to ensure that we're taking into consideration your long and short term financial goals. During the contract period is really about 10% of our value. We feel like we do have an unfair advantage because we've created a great team to take care of our clients, where all of us are working in really our genius zone. And by everybody using their gifts, we take great care of our clients. And then 60% of the value that you receive from us is after you close on your house. Most people think that when you get the keys to your house, our job is over. We don't see it that way at all. Our goal is to help you build generational wealth, and we help you accomplish your real estate and financial goals through our advice and the network of professionals that we're going to connect you with. We want to be your first call if you're thinking about doing any kind of home improvement, or if you need someone to help you with anything housing related, or if you need an introduction to a CPA or a financial planner, or a good life and disability insurance agent, or an estate attorney. Because I really feel like if people have you know if they're surrounded by those people, a great realtor and a great mortgage professional, all their bases are covered. All of their, they're maximizing and protecting the value of their assets. They're minimizing their liabilities and the cost of borrowing over time. Um, and then if they are ready to move forward, we talk with them about our, fully underwritten loan approval. So our goal is every client that is working, with us is going out and making offers with a pre-approval letter that has no mortgage contingencies. So, we send them through underwriting just like they, you know, like they have a house that they don't. So we're vetting their credit, their income, and their cash to close. Because, last year, over 34% of homes nationally sold for all cash. And again, I can show you why that's a bad plan, because, there's tax implications of doing that. There's opportunity costs of doing that. But, how do you compete against all cash offers? Well, through this process here. Um, we have that complete underwriting. You're fully approved. So you're able to compete exactly like cash, because even a cash buyer is going to want, title and an appraisal. And we can go in there and talk with you about an appraisal gap strategy, if that makes sense. And then we talk with them about the buyer's agent compensation strategy. So if you are, let's say you're a move-up buyer, and we've already gone through that equity transition plan, and we're paying off the bad debt, we're maximizing the mortgage for your short and long-term financial goals. What if you go in and it's a house you really want, you go in, make a ask offer with an appraisal gap, and you're willing to pay some or all of your agent's commission, you're probably going to kill any all cash offers because, you know, again, if someone's paying all cash, they're likely not getting the kind of advice that you're giving to your clients. Um,
Mhm.
and so we tell people, hey, here's the requirements. We want you to be willing to start making offers on houses in the next 30, 60 to 90 days. We're not going to require you to do that. But we just want to let you, make sure that you're serious about the process. And most importantly, we need you to provide all your documentation up front, so that way, we, we have everything that we need so that we can get a great underwriting decision.
Can
Um,
I ask a question here?
yeah.
Okay. All right. So let's say, we're going in with this fully underwritten pre-approval,
Hmm.
allowing us to quote unquote maybe waive the mortgage contingency here.
Hmm.
Um, what do you do in the case of, I guess this is speaking a little bit more to the appraisal strategy here.
Hmm.
Um, I guess if the client is fully pre-approved, you know up front, what ability they have to how much of an ability do they have to cover any shortfalls, huh? So I guess that would guide us to saying, hey, we're willing to pick up 10K or 20K of a shortfall. Okay,
Yeah.
I think I just
Yeah.
answered myself. Just talk, you know, talking this aloud, right? So,
Yeah, yeah,
oh,
no, great question, right? So, maybe, someone's thinking they're going to put 20 or 25% down. The appraisal comes in a little bit low, and in the process of working it out, maybe instead of putting 20% down, they put 15% down and do a single pay mortgage insurance. So,
sure.
they keep their payment, relatively the same, um, but they're just financing a little bit more.
Yep.
You know,
Yep. So a follow-up question. Okay.
yeah,
So, if there is an appraisal deficiency, um, I lost my train of thought in there. Yeah. If it'll come back to me. I'll let you know in a minute. Sorry. Yeah.
yeah,
It's
yeah.
around an appraisal deficiency. Go ahead.
Yeah,
Keep
no,
going.
no, no worries. And really you know, kind of going back to that slide of, what are we doing now with the people that aren't ready, feel like they're not ready to move forward. They don't think this is a
Yeah.
good time. Um, what I would love to offer is, hey, let me refer you over to my lending team. They will do a complimentary consultation with you and they'll do the consultation without pulling your credit, without asking you to send in a whole bunch of documentations, and they'll walk you through what's going on in the housing market, but also ask you some you know significant questions so that both you and our lending team can get a good understanding of, hey, is this a good time for you to be buying? Because again, like some of these things that we talked about, um, someone gets a hold of the equity transition plan in this market right now, um, you know, they could pretty easily get from where they are to where they want to be, and end up with a significant transformation in their generational wealth. But unless they have these conversations, they're going to be staying in limbo.
Mhm.
Yeah. So, um, yeah. Did your question come back around?
No, no. I think we've answered it in general. So, yeah,
Okay.
I'm yeah. Thank you. Sorry about
Cool.
that.
Oh no, hey, my pleasure. Yeah, well, so those are the four strategies that we had. The dreams and goals consultation, the equity transition plan, the cost of waiting and the buy versus rent. And definitely want to be your strategic partner. Again, I feel like that you know the mortgage lender of the future is really a strategic partner to their real estate agents, financial planners, CPAs, estate attorneys, insurance agents, and um, and really it will be providing the client with you know
Yeah, exactly.
strategies to help them create and um, create generational wealth.
Will you be sending us these slides from today? Are you able to?
Yes, yes, I
Great,
will send them over to you for sure.
great, great, great. Yeah.
So, well, good deal. I'll send you the slides. I can send you the recording as well.
Awesome.
And yeah, and if you have any questions, yeah, feel free to reach out and love to ask if there is anyone I can help you with today, get pre-approved and ensure it's a good use of your time.
I don't have anybody yet, but hopefully working on, putting together people for the spring.
Cool. I love it.
Yeah.
I love it. Well, Riz,
And you and
Mandy,
I will catch up more one-on-one.
yeah, absolutely.
Right.
All right. Well, hey, thank you all for attending. If you have any other questions, we can address those. If not, I'll give you back a little bit of your time here today.
All right. Thank you, Dennis. Really appreciate it.
All right. Thanks, Riz. Thanks, Mandy.
Yep.
Thank
Bye.
you.
All right.
Bye.
Talk to you soon.
Okay.
Bye-bye.
Bye.